U.S. stocks recovered from steep early losses in Friday's session but ended the week with sharp drops as an August funk continued for Wall Street. For the week, the S&P 500 recorded a loss of about 2%. Meanwhile, the 10-year Treasury yield fell slightly to about 4.25% but remained near recent highs. And therein lies the problem as investors consider the prospect that interest rates could remain higher for longer, as the Fed won't rule out further hikes. The next clue by the Fed comes from Chair Jay Powell, who will give a speech next Friday at the annual Jackson Hole Economic Policy Symposium. In the meantime, let's take a look at the charts. And we're now looking at the 2-year weekly chart on the spiders of the SPY, and you can see the close on Friday was 436.50. At this point here, we're below halfway in this channel line, and we're looking at the 2-year weekly chart simply because the 6-month daily chart, the price chart, has gone all the way through the bottom channel line, and now we're going to knock on the door of the bottom channel line with the 2-year weekly, and that's what we want to watch to see if we can hold this level in this area here. On the daily chart, it's a foregone conclusion. So let's take a look at the oscillators. Moving on down here, volume looks fine, and into the MACD. This is perhaps one of the troubling signs, is that this rollover here with the fast line is coming pretty quickly, and it's steeply moving down, perhaps through that slow line by next week. So we want to see how this fast line reacts and evolves in the next few weeks or so. Hopefully it can keep a channel move and say bottom and base in this area, maybe even lower. As long as we're above that zero line, I think we'll be okay. But it does look pretty steep and looks like it wants to head down fast, and you can see that here in the histogram with the rollover here and then the steep decline there. So perhaps the Fed meeting, or at least the Fed speech next week, will hold some promise or not. Moving down here into the price rate of change, and this is another thing that I'm going to be looking at. Look at this bottom line, say from here in the July 2022 period all the way to the current period. We have a definite upward trend line, and if we break down below that trend line, that's going to be another sign. Same sort of effect here for the relative strength index. We're at a moderate 49.90, right at that 50 line, but going all the way back here, you can see this trend line moving through like that, and it looks like it wants to break through. If it breaks through, stay on the sidelines. I am not indicating you need to sell simply because I don't know your strategy, but right now I wouldn't be buying. Looks like the stochastics, the fast line has fallen pretty sharply from this level here down below that overbought territory, and it looks like it's heading down fast and gaining momentum. The slow line will follow as well, but is this trend line going to stick? I kind of doubt it. Let's move here into the Williams. Again, that similar trend line up through here. Are we going to pivot at this point? Unlikely. Move back up to the price chart and another look at that. All right, so a lot of the oscillators do look pretty sour. However, we're still above this bottom channel line, and hopefully we can stay above that. If we break below that, then that means another negative sign has come for us. It's already broken below the bottom channel line on the daily chart. So pay attention, stack that cash, stay on the sidelines for now. And for today, that's ChewDog Charts. Thank you.